Good morning. First ever Facebook Live version of the Huddle. Surely going to be a bumpy ride. I could say that. I don't know that we fully realized this thought. Can't see any comments. I can see who's around. I don't know where's the chat, Jenna. I see a private chat. Don't see anybody, and I've already had a few people reach out about how to get on. So that tells me that nobody knows how to get on here. Anyway, I'm going to give it like 15 seconds, and then everybody's going to have to watch on replay because clearly folks don't know how to get on. Oh, wait a second. Oh, Seth is here. There we go. Well, that's wild. So Seth is on, but it tells me that nobody's on. So I don't know. Okay. Hey, Seth. Gonna give it, Jenna, we've got to figure out how to identify, because I like to see who's on, so I don't know if there's a way to see who's engaged, but if you're on, put something in the chat just so I know that you're there. All right, let's get going. So here's a really cool feature, and we're going to kind of, explore this together over the next week or so. Yes, Jen, I knew you were on. Thank you. Is I can share screens now. So if I want to just share this, can you see that? Yes, I bet you can. So this is one of the screens that I look at every morning when we're talking, right? And I kind of say, okay, here's the calendar, and we can kind of go through this now without necessarily flying blind. And this is all the overnight data that came out. 71 data points from all these different countries, half of which I have no idea what DK or AT is, and so on and so forth. But, I just sort of peruse this in the morning and, kind of look for stuff like this. Producer prices were a little bit hot. Here they missed. So, and that's not uncommon. You're going to see a mix. CPI missed. So far on balance, sort of the overnight data is somewhat bond friendly. Hot GDP here in ZA, wherever the heck that is. Hot CPI here, but with a monthly miss, core inflation miss. So net inflation overnight, a little bit better than expected. And then I usually just sort of click over here to the markets. And when I talk about what Asia up pretty good overnight. Europe up 0.5 point to 1 point. We've got futures are flattish, volatility down. And when you look at, come on, where are you? Why can't I navigate? Is this not fully loaded? Can't navigate down to, I don't know if this is screwing up my browser, but underneath the world indices, usually are commodities. Not 100% sure why it won't let me navigate to that, but you could see the price of oil is down about 1.5 points. And hence a big reason why rates are better on the day at the moment. We're opening up, and this I can't share on my phone, but generally speaking, bond yields are better by about 2 basis points. MBS, maybe has caught slightly more of a bid. We might be tightening a bit to 10s. The belly is up 2-3 ticks. Down in coupon might be up 5-6 ticks. The data that's hit onshore here already this morning, business optimism, slight miss and down month over month. And the weekly ADP, 29,000, down from almost 36,000. And last week revised down. It printed at 36, came in at about 30. So generally speaking, all bond-friendly data. We closed the trade gap. Can't really speak to how bond-friendly or unfriendly that is without diving in. Theoretically, right, if we close the trade gap, that means that businesses are benefiting from perhaps selling a bit more offshore, and that could be bond unfriendly. Hey, Brent, glad you made it. Dion, welcome. Long story short, the why, not as important as we're bouncing here a little bit, kind of around support. Not a heck of a lot going on for the rest of the day. We do have some home data at 10 o'clock. Not sure that's going to move anything. I think the big news overnight is, and I'm just going to kind of read you some of the Iran headlines. Trump vows total victory. Netanyahu confirmed a ceasefire. Israel halts strikes. And that's sort of been a wrinkle that I don't think folks really intended on having to navigate, which is the Trump-Bibi relationship and trying to rein in Israel and stuff like that. That's become, I think, a more profound narrative in this whole conflict. And then I don't know why it's still up there, because it's 3 days old. But that conversation that we alluded to yesterday about only U.S. and China having the tools and the ability to unearth the uranium that was buried below these strikes. So, long story short, fives, if you look at a 1 day on fives, probably a 2 day is better. And I'm still sort of sharing that. We've got a little, not a good looking 2 day, but we have bounced off the worst levels. We got to 98 flat, or as we like to call it, 98 the buck. And that's sort of, maybe a psychological level. I mean, we certainly breached 98 for sort of a cup of coffee, third week, second and a half week of May. So what did we do yesterday? And this is a little bit of yesterday's news, but we did flatten our shorts yesterday afternoon. And we did it kind of earlier in the day, 2, 3 o'clock, 4 o'clock, which when I say earlier in the day, not necessarily early in the market day, but we do a ton of West Coast business. So quite a bit of our lock activity happens after 4 o'clock. So when we flatten that position, barring a disaster, we kind of understood and accepted that we'd probably end up going a little bit long into the overnight. And that, while I'm, not going to buy an island on the windfall from that call, long story short is we did wake up. We did find ourselves a little bit long, and we're kind of keeping an eye on it. I'm not ready to cover just yet. I'm not convinced that this rally is going to sustain. I kind of like that ADP number. We talked a lot yesterday about non-farm on Friday, and while the more I dug into it, the more I did the more I was inclined to maybe back off my statement that there weren't many silver linings for bonds in that report. I do think we found some more for sure. And so, therefore, this ADP number, while this ADP number, while certainly disconnected from Friday's non-farm, right? We're measuring a different period. It certainly helps to support it, right? Whereby, okay, maybe that hot number wasn't quite as hot as we thought it was out of the gate. And more importantly, and we talked a lot about this yesterday, is in some ways it's less about those silver linings, that deeper dive itself, and how, and you've heard me say this a million times, how that report ages. And for it to age, several things have to happen. One is time has to pass. And then two is we need new developments to support or contradict that anticipated aging, if you will. And so while very early, certainly this ADP report and last week's revision, which for the record, that revision is a May revision, right? It's only June 9th. That is supportive. And this is where now you kind of go into a little bit of an economic rabbit hole where you start to make your calls. I don't know that I'd call ADP a feeder report into non-farm. I think there's correlation there, if you will. It's certainly a feeder report into the ADP report. First place I go now is, okay, we've now increased the likelihood that we're going to get a negative revision on ADP, right? And if ADP is the theoretical, more reliable report of the two, then how will that impact non-farm? And being that non-farm was such a big headline beat, you could start to formulate, axe might be a big word, but you can start to formulate a bias or an axe to where if you're going to take a position, if you're going to, try to trade this, which I'm not suggesting you should or we are, you might want to make a bet that there's going to be a negative revision going into next month's non-farm. I think that further, the June measure of payrolls tends to still have some wonkiness in it from recent graduations and such. But as we get more into the depths of the summer, unless this year's an outlier, and frankly, I don't necessarily see it, I think as we've talked about, as we get farther away from February 27th, 28th, whatever the date was, we get closer to resolution with Iran. We could be looking at a really bond-friendly first week of July. I think that the likelihood of that has gone up for me, a little bit, whereas maybe I was 70, 80% pessimistic, 20, 30% optimistic. I'm maybe up 10%. I think I'm closer to 40, even 50-50 that we're going to start to get some relief around the first week of July, if not sooner, if we do get some good news, out of the resolution of this conflict. I think what the market is looking for is if we can rein in Israel, that will go a long way to resolving this conflict. That's all I've got really for this one. If you have any questions, post them in the chat real quick. The first week here is going to probably be a little bumpy as we get our footing and kind of figure out how the chat's going to work, throughout the day. And Jenna, correct me if I'm wrong. We're going to kind of, at least in the beginning, use our empowering brokers as the vehicle of communication. Is that right? Where I might go in that chat and post, hey, this is happening or that's happening. So that sounds like a yes. So, if you're not in empowering brokers, make sure you get in that community. But I'll be posting some stuff. And then as the days go on and I'm a bit more prepared for this, I'm going to be sort of taking screenshots throughout the day or whatever. And now that I can share my screen, I'll be able to share that stuff and be able to kind of direct you guys to those things on a going forward basis. And I don't know, I'd like to put some fun graphics in here and get it, some choo-choo sounds or something. I mean, if we're going to do it, let's do it right. Rest of the week here before we sign off. Tomorrow, so let's talk strategy here for a second. So we got fannies rolling tomorrow. NBA apps, not a market mover, but just talking out loud. Apps have been, struggling the last couple of weeks. I mean, refis down big off the peak, 30-40%. So something to keep our eye on. Kind of the market speaking, I guess, right? And then 8:30, the one that we've been waiting for, CPI. We're expecting 0.5. Last month came in at 0.6. Year over year core, we're expecting 2.9. Last month was 2.8. And the monthly core, we're expecting 0.3. Last month was 0.4. Going to be interesting to see if inflation is going to reverse, or if CPI. I almost hate to call it inflation. It's not. I'm sorry. It's the price of things as far as I'm concerned. But it'll be interesting to see if we go the other way. How do I play today? Well, boy, it's similar to yesterday, where I would say 6.25 and above. If you're closing in June and you haven't locked yet, it's just really hard for me to want to take risk on into tomorrow. It's an incredibly unreliable measure of inflation as far as I'm concerned. What I will say is oil prices are down, right? I'm not saying this in a scientific way. I haven't gone so far as to fully extrapolate the data yet. Probably take a little bit of a deeper dive this afternoon on that while we kind of close out our position for the day and as we prepare for tomorrow's open. But anecdotally, we have seen the price of oil go down. So there's a really good likelihood that this number could be soft on the strength of that and shelter. I kind of wonder here, and by no stretch am I jumping on this bandwagon that, somehow the price of housing and the supply demand, we've returned to some degree of normalcy. And just as we've talked about inflation, the slowing of the acceleration of prices doesn't mean that prices are going down, right? In the world of inflation, that's called disinflation, not deflation. Deflation of housing prices, is a problem. And we can argue if that's a problem or not, but in terms of if you're trying to sell your house, that's a problem, right? The slower increase. Last year, the price of my house went up 10%. This year, it went up 8%. And I want to kind of cut it here in a minute, but I could speak for an hour on how defective a mindset that is and how we compartmentalize our personal and our macro economics. I've lost 2%. No, you haven't. You gained another 8% this year. So I would expect to see an acceleration of monthly prices despite all the noise that we're hearing. But notwithstanding that, understand how year over year is calculated, even arguably month over month. If we were accelerating at a bigger pace last year and we're accelerating at a slower pace this year, the likelihood that we print a better number, albeit not deflationary, becomes really, really great. So while I've been calling since October for a bunch of hot CPI reports, I am somewhat in line with the consensus here that there's a good chance that we're going to see a little bit of a softer report tomorrow. But that being said, I always say this, Bulls and Bears, if you're, and I don't know what refi day is this month, somewhere around the 20th, I suppose. You've got what, 6, 7, 8 business days between now and refi day. And then you've got to get out CDs. I just don't see floating into tomorrow. I think certainly 6.25 and above. I'm locking this dip today, 5.5. So it would be 5 3/4 to 6 1/8. Maybe I'm 70-30 at the worst, right? If you want to take that day by day, I couldn't, absolutely kill you for that mindset, but I don't love it. And if you're 5 5/8 and below, I mean, again, hell, you should have locked 3 months ago, and then you should have locked 2 months ago, and then you should have locked the other 100 times I told you to lock. So what really do you have to lose? Well, if you took on a floater in that bucket of rates in the last couple of days, you could tell a good story. Hey, I saved you 500, 1,000, whatever the heck the money is. Lock them today. If you're chasing the loser, I don't know. I don't necessarily know the point of locking here at 98.3 on the screen, right? I mean, sure, we could get to 97.12, but what I would say to you is, in a vacuum, the worst of the data is sort of behind us. Now, tomorrow could be disastrous, but what I mean by that is, in the month of May, if you recall, or it might have been the end of April, days and weeks running together, it just sequentially, report after report, was nearly disastrous for bonds. Whereas the last week or so, there's some light at the end of the tunnel. So that's why I say, hey, I could see why you continue to float that kind of stuff. So thanks for joining us on our first Facebook Live. These will get easier to get into, a little bit more robust. I'm excited about doing it here. And as always, if you watch on replay, which, it's something like 100 to 1 people who watch on replay to who join live. Hey, thanks for watching, and look for some commentary. And if you watch this later and you want to throw something in the Empowering Brokers chat, throw it in there. I'm going to be looking from time to time. Have a great day, everybody.